Well, as we sit here in Clifton in Cape Town and the entire country's property market is quite subdued, the rest of the world's property markets seem to be under quite a lot of pressure as well. I mean, Australia, I saw a picture in the Australian Review that there was a very clear indication that Australia is slowing down. The UK, post the Brexit mess that has happened over the last 3 years, has seen big declines in property prices, particularly in inner London, where many South Africans with means have actually invested in recent years.
Yeah, I think there has been a shift in the global property market. A number of the major cities of the world are going through an interesting time. I think from a South African perspective, the diversification opportunity that these global cities and other destinations represent continue to offer opportunities for South Africans. Obviously, the golden visa opportunity is a separate one on its own.
There's Portugal and Malta, places like that. So you can get an EU passport if you come in and invest in fixed property, and after 5 years, if you're still here, you get your passport.
Generally speaking, it's a period of time. In Malta, it's much quicker than that. In Portugal, it's 5 years. And I think that what we've seen over the last 10 or 15 years is that increasingly South Africans are looking to diversify into the global property market.
You call it diversification, I call it Plan B. I mean, in some cases, I'm sure it is that sort of thing. And it's so interesting that people will go into bricks and mortar and in other jurisdictions as well, and not go into equity markets. Because I don't know how far you go back in terms of your records, and certainly as just off the cuff, but if we go back to when Mandela was released from prison in 1990, or on the day that he was elected president in 1994, it's a good quarter of a century. How has the property market in South Africa held up versus, I don't know, the JSE over that time, or over global property markets over that time?
Yes, the South African market has performed extremely well over that period of time, if one takes a long view. And I think that one's got to do that, both in terms of looking at one's South African property portfolio, but also in terms of the international portfolio. So certainly at the moment, London represents a buying opportunity off the back of Brexit, but there's no doubt that London, and particularly if one takes the currency into account, has been an extremely good bet for South African investors.
But as we sit here, I mean, there are thundering jackhammers and there's heavy equipment all around us. There are various building sites going on. There is still money going in to brand new property and to build almost, especially in a place like this where you're building on a mountainside, almost on a sheer cliff. It's a very expensive construction process. You're not going to get much change out of tens of millions of rand to build a property like this from scratch. At some point, there has to be an equilibrium. I mean, it costs more to build it, so therefore, built property will stabilize.
Yeah, I think there are always people who take a contrarian view of, I suppose, the conventional wisdom of the time. And certainly we're seeing that there are a number of people who are investing both in terms of buying property, but also in terms of developing property, because they have a long-term or medium-term view of what the property market is going to do in Cape Town or in the country. And they take an optimistic view of that and a long-term one.
Or unrealistic. I mean, there is a real fear that this market doesn't recover, that South Africa's economy doesn't go, Moody's does downgrade us, that we do go into a period of perpetual zero growth. This economy hasn't grown in real terms for 5 years now.
Yeah, so that certainly is a view, but I think that the investors who are choosing to develop and invest are obviously taking a different view, which is that they're going to invest today for a medium to long-term investment return, ultimately when they exit those properties.
Which is the best property market in the world right now? And don't say because you've got 400 houses in the southern suburbs of Cape Town in your books that it's Cape Town, because it may or may not be the case.
I think there are a number of different locations, and it depends really on the buying need. So if one is looking for pure investment return based on the property market return and currency return, one could get a certain answer. If one looks for a lifestyle component to that investment, one could easily say the Atlantic seaboard of Cape Town. I think from a South African perspective, in terms of desirability, the Atlantic seaboard has got to be the blue chip investment destination. And right now there are buying opportunities.
Lots of them.
that exist.
I mean, do you get a sense of panic or not?
So, Bruce, I think that the property market is always going to be cyclical, and it's always going to move.
Do you get a sense of panic? Are people really scared, slightly afraid, tenuous, apprehensive, cautious?
So
what's the mood?
I think you hit the nail on the head earlier by saying that, if one looks back over the last 30 years, there have been a number of points of crisis that the country has experienced, or that the sentiment has expressed. And I think we're in that another period of those right now, where people are taking a view on the future of the country post the election. But I think that the overwhelming sentiment is that this election result was more positive than negative, significantly so. And so I think if one was to get a proper opinion of a great number of people, one would get a positive result rather than a panicked result.
If we start getting some interest rate cuts, and there's very clear indications that we might, there's no demand in the economy, so inflation is low, and if the US keeps cutting to try and stimulate their economy, and global growth continues, and Chinese demand for iron ore continues, and they keep industrializing, I mean, all of those things are good factors. South Africa doesn't go over the cliff and into the lovely swimming pool down there, that we get back to a normal. What is that normal? Is that a normal of 5% above inflation in the property market? Because that's kind of what we got used to after the madness of the sort of pre-2008 period.
Yeah, I would say that is a description of normal. So, some significant real house price growth above inflation as a consequence of an economy that is genuinely on the move, where sentiment is positive, and where there's an appetite for investment. And I think that that's a real scenario.
Dr. Andrew Golding, from your lips, we certainly hope so. I mean, there was a time where you would buy a property in full expectation that in 5 years' time, not only would you cover the costs of the transfer duties and the estate agents' fees and all of that sort of stuff, that you would still be in the money. And a lot of people have made good money out of South African property, not only residential property, but rental properties. And that sort of cycle feels a bit edgy right now. It feels a little bit nervous right now. But history, and this is where I start to sound like a bit like a financial services advert, past performance is no guarantee of future performance. But our history tells us that we go through cycles of deep pain and deep discontent and deep discomfort, and things get cheaper before they get more expensive. But the cycles of the past suggest that the cycles of the future do continue. We certainly hope so. And for the seller of this house in Clifton at 49 million rand, if you've got an offer, I'll take commission. I'm not allowed to do that, but Andrew Golding will sell it to you. Thank you very much for watching Taking Stock. We've been taking stock of the state of the property market this evening here on ENCA. Until next time, bye-bye.